Thank you for being our trading buddies this Thursday edition of That Exact Show, Trading Buddies. Glad you could join us. Wow, got to say, for me, it's been a boring couple of weeks, given the market's toing and froing, which is good. It's got movement in it, but it's not meeting my eye too well. So I haven't been doing too much trading, apart from the fact I've been busy as well. I do have a couple of orders that I'm going to place very shortly, however. But before we do that, let's go and have a look at the pound versus the US dollar, shall we? And see if we've got a trade on offer for us today. Right, here's our high. Here's our low. And currently, we are well enough from that position to place an order. Should this candle close as it is, or even a little bit further down, we'll expand the range if that's the case, and the midpoint will change. But at this point in time, I will be placing an order long at 113. I think it's 113.84. Just let me get that right. The high of the range is 113. Sorry, that's the high of the range, 113.83.4, which makes it 113.84. That's cool. And the low of the range is currently, why have I got it there? Because there's the candle. Duh. The low of the current bar is 113.14, and that's exactly what we'll be using. So it'll be 70 pips of difference if this candle doesn't close any lower or go lower than it currently is. If that's the case, the midpoint will be 113. 14, 35, 70 pips, yep. It will be 35 pips above there, which will be 113.49, which is about there somewhere. Let me get that exactly right, 113.49. And we've got a minute and a bit to wait before that candle actually closes. Yesterday's was a good one. Can't remember where the entry was. Down here somewhere, I think. Oh, no, it's there. Somewhere there. Or somewhere up here. Can't remember exactly. But it got 2.5 to 1, no problem. So the target was hit. The day before was not so good. That was, in fact, a loser. The day before that, which was Monday, of course, no trade because we were pretty much bang on entry. So we've had one loser, one winner for the week so far. Let's see if we can get into, looks like we'll be getting into this. The low is trying to stretch itself down a little bit further. It's now gone to 113.13. So we'll sneak that down if that's the case. The midpoint is going to be half a pip by the look of it. Just waiting for that candle to close. Remembering, of course, with our 2.5 to 1 target, that we can get 2 wrong for every 3 places that we every 3 trades that we place. The important part is to get every day you possibly can, because the numbers work better that way, right? If you trade it every day, say you traded it on Monday and Tuesday and didn't trade it yesterday, then you'd be losing. I can't help that. That's the way the numbers. So it's important that you do trade it every time. If we prove it to be a strategy, right? At this point in time, it is not that. But I am encouraged by the results that we are getting so far, and particularly if we're using that 2.5 to 1 win target, because as I say, it allows us to lose twice in every 3 trades. Okay, there we go. So we're going to make the entry 113.49.5. And we'll get the trade manager to manage that for us. 113.49.5. Again, very little risk on the table here, folks. 113.495. will be the entry. Stop loss will be the low of the bar, which is 113.13. And the first take profit will be the high of the range, which is 113.84, which means a difference of, you guessed it, exactly the same amount, which is 113 to 136.5. That doesn't seem right, given what we had before. Be 48.5, won't it? Let me work that out properly. 113.13 to 113.84 is 71 pips. So we want to go 35.5. So it should be 48.5, not 49.5. My apologies. That makes more sense. So 71 is 35.5, right? Yeah. 48.5. 35.5 will be TP1. Yeah, my brain doesn't work too well on Thursdays. 38.5 a lot times 2.5. I'll work that out in just a tick. First take profits 113.84, which is I can use the level, can't I? 1.1384. That makes more sense. We don't take anything off at that point, but we move our stops to entry. Now 2.5 to 1. Get rid of TP2. 2.5 times, what is it? It is 35.5. So 71 plus, let's put 35, shall we? Plus 17.5 will be 87.5. Let's go with 87.5 pips from there. That will be right about 114.36, let's call it. 114.36, what did I say? 87.5. We might as well just put that in. 87.5 pips. There we go. Why does it take me so long to do? Righto, so entry there. 113.48.5. Stop loss 113.13. Move stops to entry at 113.84 and get the hell out of there at 114. That was 36. Takes a while, but I get there in the end. Okay, so that's the pound versus the US dollar. Not really wrapped in the entry, right under the daily pivot there, but we're not adding any filters to this, apart from we're not trading in the same direction as the candle that precedes the London session, and we are not trading if we're anywhere near, if price is anywhere near the entry point when London opens. So long here, guys. Okay, let me get through a few things that are on my mind, one of which is pound versus the Canadian dollar. Now, ordinarily, I would say to you, this is at a, well, it's not really at a strong resistance level. It's probably snuck through there, if I'm completely fair, because I think that's probably the level there. There is another one up here, of course, but I think, again, we're probably through that. So I think there's a bit of space to the upside. Why I would hesitate normally to trade this is because we've got 1, 2, 3, 4, 5 of the last 7 days as absolute bullish price action and no real retracement, which is, of course, what I like to see. That said, I've got very strong warning signals from my favorite candle patterns telling me that this is going to go further long. Now, I can't tell you why that would be the case in fundamental terms, but I do see the scenario there that suits my eye with everything except no big pullback. And that's what I like to see. So I'm getting in at really the wrong part of this cycle. Again, that said, If it goes back above this candle, then I think we're on our way again. So I think there's more upside there if that's the case. So without the retracement, I am going to place that order, but I'm going to, because there is no retracement, I'm going to place it at very small risk, so 0.25% only on this one. So again, employing the trade manager, we're going to go long at 155.25. Again, very low risk, 0.25% only. 15445, is that what I said? 25, 156, 156, 155, 15525. Maybe I need new glasses. Stop loss underneath the very same bar at 153.65. 1.5365. Get rid of the take profit pips. We'll go with the TP1 at DR2, maybe a little bit higher. What's the risk? 166-ish. Where's some resistance about there somewhere? Maybe there. Okay, we'll go with that. 156.17 will be our first take profit, or my first take profit, 1.5617, and I will remove 1/3 at that point. Stop loss can remain where it is at whatever that was, 140 pips, and TP2 we will manage if and when we're fortunate enough to get in the position. Target we don't want, we got rid of that, so that's all good. It is a buy. All right, that's pound CAD taken care of. Now, euro dollar. Euro dollar very, very similar, except that we're now below this resistance level. We haven't broken it, retested it. Same setup, exactly the same setup. We've approached this resistance area, we've pulled back away from it, and we've cleared mind the most pressing resistance area here. So I'm expecting once again, if price were to get back, should go to the next one, which is probably here. So that leaves room for take profit. Again, my preferred option would always be for a deep retracement off this very, very bullish move that we've had for the last week or so. That's not there. And for that reason, once again, I'll be reducing my risk on this. I'm flagging potential upside for maybe a few days. And a lot will depend, of course, on what happens with the figures coming out tomorrow in the States. We're trying to preempt that. And if we can get into here and get safe in the market before that announcement, then we could get a nice free ride. We'll see. So again, levels on this one. I'll be a bit quicker with this, I think. And ease your pain. All right, entry level. Let's open the box before I have to remember too much. Again, only 0.25%. Entry level. Above that bar is 9995. Let's don't be ridiculous. We won't trade into the whole number, which is parity. That seems crazy. We're going to go 10 pips above that level. So we'll go 1.0005. I think that's right, 1.0005. Yep. And the stop loss, we'll have to get underneath the monthly pivot here. It is at the low of this bar, is underneath the monthly pivot, I believe, 98.34. 0.9834. There we go. Get rid of the take profit pips. That's our target. We don't want that. TP1. Conservatively, I think we probably need to take TP1 there. 10114. 1.0114. Again, we'll remove 1/3 and leave our stops where they are, which is 150, 166, 171 pips. 171.0. TP2, we will disable and manage that in need. It is a buy order. Okie dokie. Entry there, stop loss there. TP1 is pretty much right there. 101, whatever it was, can't remember exactly, but it's pretty much there. All right, that's what's on my mind currently, and there are a few more things that I want to talk about a little bit later. But let's bring Ash in because it's time we said g'day. Hello, buddy.
Hello, mate. How are you?
I'm okay. Yeah, not too dusty. I'm getting bored.
You're bored?
Yeah. I placed 2 trades this week, apart from the pound trades, of course. Eddie, sure, do that. I'll go through this again for Eddie, mate. The pound CAD trade.
Yeah, no
very, very quickly. So we're entering above this bar at 1.525, and I've got a stop loss below that bar at 160 pips below that, whatever that was. 160 off there would be 1.5365, I think you'll find. That will be, anyway, if that does equal 160 pips, then you'll have to work it out in a calculator, but I think that's right. I'm taking first profit 92 pips above entry, and I'm going to close 1/3 of the position, and I'll keep my stops where they are, and TP2 will probably be up here somewhere, at which point, if we hit that, I'll remove another 1/3 and move my stops to entry. That's how I'll manage that trade. You're very, my pleasure. Let's hope we can get some cash in the bank with it. You're warm, mate. Your t-shirt, I'm freezing.
Oh no, it's not. It's temperate. It's temperate. It's okay. I had a bit of a cold over the weekend, and it's starting to just clear a little bit. So I'm kind of like just getting back to a bit more normality. So I'm not feeling the kind of shivers, but it's definitely switching here now. We're definitely getting blustery and all sorts of stuff.
Yeah, it's so windy here. It's ridiculous.
What's that, sorry, mate? Now, is it your connection which is bad, or is it mine?
Oh, probably mine. I don't know.
Okay.
I can hear mine.
Okay, all right. Well, let's talk markets, mate. I think the last few days, I mean, the first 2-3 days of this quarter have been probably as volatile as people thought, but maybe not in the time period that they thought it would happen. You know, the first 2/3 days have been crazy. I mean, you know, that chart you just had up there, the move to the upside was pretty vicious. I have to say, mate, your call on silver was a cracker, and I don't know if you managed to get into that, and a very difficult one to get into. But silver just took off. I mean, I'll show you some of my charts.
I don't think it was long after I said it either, was it?
Let's have a look. See what's been happening. And you know, and I'll talk to you about the FTSE 100 as well. I've got some management to do on the FTSE right now because it's kind of been so up and down. As you know, I was short on Monday, and I did say that if things started to turn around, that I would flip positions, and that's exactly what I did. But I've still got some shorts down the bottom that I'm now having to manage, and we'll get to that in a moment. But look at the silver, the situation with silver just came straight in. So this is Thursday's bar now. So this is the Monday bar. Just an absolute crazy rocket move, explosive move to the upside through some levels here. As yet, not testing this particular trend line, but it has tested this low here, or this previous high here. So it might come back one more time and nestle into this area before we see some investors really start to pick up on the story. But we've seen bond yields coming down. We've seen the dollar coming down. We've seen some interesting moves from some of these central banks. We know about the pound. The pound's a central bank in the Bank of England has been incredibly dovish, really, when we kind of consider what's happened across the board with rate hikes. Different situation from the Bank of England. So they did hike rates, but not as high as everybody else. And they started to buy bonds on the longer end of the yield curve. So very dovish moves in a rate hike scenario. And now we've seen the Bank of Australia as well do the same thing. Really surprised the market with a less than expected rate hike from the RBA. And that has put the market in this situation where they're thinking, okay, well, we've got two of the central banks of the 8 that we look for to set policy now, sort of almost starting to kind of unwind the hawkish positions. Will the Fed go? And because of what the other central banks have done, and because there is this assumption that the Fed is going to pivot, regardless of the rhetoric, we've seen other assets now really start to take off. So silver chart really did take off. Gold also got a boost, but not really at quite the same velocity. And then across the board, we just started to see risk assets start to move higher. And what's interesting is that even though these risk assets, look at the NASDAQ here. Now, this is on the dailies here, but the NASDAQ managed to take out this level up here. But has it gone far enough? And we're on this monthly pivot. So what's happened is that we've basically arrived at levels of potential resistance, which gives the bears a decent level now to try and get back into the downside on. So this is there's a trend line along here, and look how it coincides with that monthly pivot right on top of the monthly pivot here. So this looks to be a retest of the trend line, and it looks to be an opportunity for people to now get in on the short side. And with a Fed pivot, that probably wouldn't hold. But the Fed has said nothing about pivoting. So the assumption and the speculation that we could start to pick up, probably the last quarter's unwinding of some of the short positions as well, along with the start of the month, along with the start of the week, along with options expiry and all sorts of things, has provided some move to the upside. But now we've got this situation where we are on a resistance level, and we're dealing with stocks. Stocks are a completely different beast to many other asset classes, where the magnet tends to draw it higher. It's not like a gold chart, which will tend to react to technical levels in quite the same way. This thing will tend to draw the price action higher. So this is a pivotal point, and really, we've got one of two things that we're looking for at this particular point here. Either we will look for this to happen, where price does actually get through this level and then comes back to retest it, and then we're looking for trades in this area, or price does hold here, and actually what we're looking for is in the next sort of couple of weeks, it to kind of like get down and maybe break through these lows and see us down closer to the 10,000 level. Now, the latter, this particular one, is the one that I will anticipate happening at this stage, because until we're through, until we're through the level, there's nothing to suggest that anything else is to happen. So recession looks like it is very much on the cards, and that will probably sort of cause this particular scenario. Now, the FTSE, very similar, and as I say, I've got all sorts of cleaning up that I'm doing on the FTSE right now. So we'll talk about what I'm looking for with the FTSE. Now, the FTSE, I'm also looking for some short side on the FTSE. I wonder whether it'll be next week rather than this week. So I'm not necessarily looking for the market to collapse this week. I wonder whether it gets that 1 week, it holds positions, doesn't go further than we are now, but we kind of cling on. Now, I've got a short down here, which was from last week. I did flip positions, but I didn't close the short. There wasn't quite enough profit to close the short on the upside, so I just took the profit and I've decided to hedge the position off anyway. I did take another short here to try and rebalance it. That currently isn't quite. I don't think it'll be found the high. So because of that, I've just hedged the position again here. And what I'm looking for, I'm not too worried about the hedge, but what I'm looking for is for this to break down. Now, if this breaks down, that gives us somewhat of a falling wedge scenario. Might not be there. There could be a couple of different patterns in here, but that, if that was the pattern, would suggest that the measured move brings us right back down to the lows. When it breaks down. So plenty of time to kind of to deal with a hedge if this market does turn around. But I wonder whether with the FTSE that it's got maybe just a little bit further to go. I kind of see that there is this level along here. That looks more likely. There's a touch here and there's a couple of touches over here. So I wonder whether we might be in a scenario where this is the area here before we start to see some genuine downside, which will fix things up for me because it means my hedge is working out. I don't really like it when I take a hedge and then the market turns around. It's not too much good for me. But if we talk about what's happening with the FTSE's had a slightly different scenario. Yesterday was a really good day for the FTSE. And the reason for it really was because OPEC Plus has come out and said that they will be cutting oil production. Now, that was always going to be on the cards, but I think the size of the cut is probably bigger than the market expected. And that saw BP and Shell really start to take off and really drag the rest of the FTSE with it, because the rest of the FTSE was down for most of the day. But BP and Shell, being the behemoths they are, started to move the market higher again. Now, profit taking is happening on both BP and Shell this morning at the tune of 3%, 3.5% on Shell, and about 0.5% on BP. But the other stocks now are starting to play catch up. But that does suggest that the cuts that OPEC have made may not permeate through into higher oil prices, sustainable higher oil prices. And I think the reason for that could be the risk now that recession is deeper than people are concerned, that were originally concerned about. So even though these markets are getting a boost, and even with a pivot, the recessionary concerns are very much there. Because if we think about what a pivot means, it suggests central banks across the globe, including the Fed and the ECB, are effectively holding their hands up and saying, we are not going to be able to fight inflation. So inflation remains above 5, 6, 7%, and yet they pivot and try and add liquidity, which is just the perfect storm for something to snap. So would you then buy stocks in that environment? It's very difficult, mate.
Difficult.
The kind of binary thing for the last 5 years has been central banks add liquidity. Let's just go and buy some risk assets. Brilliant. But that binary thing's kind of off the cards now, because central banks provide liquidity, but inflation is becoming really embedded, which breaks economies, and subsequently earnings then get affected, and ultimately that's what this is all about. Stocks really are going to be sort of reliant on earnings. So I don't know whether we've got a scenario right now where we can say that the last 3 days is the outlier for what's to happen next. I think it is more likely a very strong retracement back to the upside, and we're about to turn back to the downside again. So I'm quite keen to wait and watch this, mate. My signals right now are suggesting that it's too early to get in short. But if this market can't push higher over the next 2 days, I think next week we might well see these positions start to unwind. It might be as early as today, it might be as early as tomorrow, but it's just not quite right now. But I think if we don't see it today or tomorrow, next week I'm quite keen to look for the short side. I will finish, unless you've got something to comment on that, mate.
No, look, I completely agree with you. I think this is called a short covering rally, call it whatever you want to call it. But to me, it hasn't really proven anything just yet, except that it's on its way to a resistance area, and it's that resistance area where I want to pay attention. So yes, as you say, NFE what they call NFEC these days, NFP, may have an effect on that. We'll have to watch what happens with that tomorrow.
Yeah.
But yeah, I can't wait till next week, because I think there's going to be some nice opportunities to trade.
Yeah, I think you're absolutely right, mate. I think that's really what we're waiting for. We've got to be patient really right now, because even though the market's at probably the correct levels or in and around the correct levels, to look for opportunities to reverse it now at a decent price. It's been hard for a few weeks, but now at a decent price, and now after a decent retracement, we've really got to wait for the correct signals to say, okay, now's the time to pull the trigger, because the price is right. The catalyst has not turned as yet. The catalyst that drove us higher has not turned just yet. If NFP comes out and is positive, that's going to be negative for the market. This is the situation we're dealing with. And this is why fundamentals and data releases become very confusing, because we get into a situation where it's really about batting the ball back to the Fed, and a strong labor market leaves the Fed in a strong position to continue to combat inflation, and that is potentially not good for the stock market. But as the stock market waits for a pivot, which is the same, mate, it's a strange one. Stock market waits for a pivot so they can have the liquidity party that they've been having for the last 5 years to drive things higher, and yet the inflation picture suggests that things could get quite deeply entrenched and very painful. So even with that pivot, it's not really a hard and fast rule that it means that earnings are going to all of a sudden start to explode back to the upside. I just don't think they will. But I was going to finish on the Aussie CAD, mate, because the Aussie CAD was my kind of currency pair of the week, and it's been a really interesting move on the Aussie CAD, because I think when we were looking on Monday, it was here and it looked like an opportunity to buy this as there was this little trend going on here. The bigger picture was not in favor of that, as you can see. But this was Monday's bar here. Now, as this came down and we start to zone in a little bit, we got into the hourly, and there was this little trend here which suggested that there was an opportunity here. But it came to the monthly pivot, switched around. Then we had that announcement from the RBA, which drove the price all the way down to these support levels down here, created this lovely double bottom, and now it's back up again. And if we look at what the bar is on the week, this is currently green. So and look at that level. It basically came to that level and provided a lovely double bottom, and then it was off again. So really good position on the Aussie CAD, and it looks like it's through this trend line as well. Oh no, it's not. So it's got to get through there. But
I think, like so many others, it's gone so fast in both directions. Where's the pullback? We need retracement here. Well, I need retracement. And I said exactly the same thing on both of the things that I've just placed orders on. I need retracement.
Yeah.
But they not. For that reason, I'm just going in very, very lightly on both pairs, euro dollar and pound CAD.
Well, do you know what, mate? Your pound CAD one's a really interesting one, because if the Aussie can provide this kind of price action and pretty much get back to where it started on Monday, after the RBA came out with a more dovish rate hike, what does it tell you about the CAD? It's not looking good for the CAD. And if you look at the COT data on the CAD, which I can show you guys if you like, but look at this on the CAD. I mean, it's where do we go? Here we go.
With the CAD, well, really two things with the CAD. One is and if we think little rocket where we higher oil prices, but if as you said before, if was it OPEC that decided to cut?
Yeah, OPEC Plus have cut production by, I believe, half. It was quite a big cut.
So that's probably and why then say scenario.
Oh mate, I keep losing your internet.
Okay. Can you hear me now?
Yeah, okay now.
Okay, so you said that OPEC plus, whoever OPEC plus are, I don't know who OPEC plus are going to cut supply, which logically you would think that the price would go up, but you said that may not be the case. Why so?
Well, not so much that it won't be the case. I just wonder whether it's sustained. I wonder, I think maybe in the short term that might well have a reaction to the market where the price goes up. But there's a couple of reasons where I wonder whether it be sustained. The first thing is the Americans have come straight out and said, now hold on a minute. If you're sort of starting to do this while we've got this energy crisis, that doesn't help us at all. So what we're going to do is start releasing 10 million barrels of reserves. So there will be probably counteractions, maybe to soften some of the blow. Now, you've got countries like Nigeria, which are a much smaller oil producer, and they are not at their quota. So even though OPEC Plus can say, right, we're going to cut production by this amount now, but if you are not yet at your quota, then you can continue to produce. Smaller nations are not going to be too happy about having to cut production. It's just that's how they kind of make their bread and butter. These behemoths can do it because they can cushion a lot of the blow and drive the oil price higher. And there are the likes of Morgan Stanley that have come out and said that Brent should be above $100 a barrel, $100 to $110 a barrel. And it's currently at 93. So there is the likelihood that we do see a bit of a push in price. And also OPEC's target is $90. They have effectively said we're not selling oil for less than $90 a barrel, which is why they're going through these processes of cutting production to drive the price higher. But if you've got a global recession due, then even though the supply might get cut, we might well see a demand cut as well. So I don't think it's quite as clear cut as OPEC are going to be able to control the price in the way that they probably perceive. As I say, I think in the near term, yes, it's likely to cause enough shockwaves to drive us high, but I just don't know if it's going to be sustained. I might be completely wrong, mate. And it's a very loose kind of idea, really. It's not really even a theory. It's just a loose idea that there might be sort of like there might still be some pushing going on in this particular story that doesn't suggest that it's quite as clear as OPEC cut and the price of oil goes higher. Now this is the CAD. This is the CAD on COT data. Now look at the interesting, and then these are the long positions from last week, and look at the cut. If we look at what we've had for the year. This is the net longs here. This is net longs here. This is net longs here. So under the 3,000 mark here. Now this is just above it, but we've had obviously sort of a number of weeks already this year. Whatever a third of 52, you can a quarter of 52. You could delete that and know how many weeks we've had. And this is in the bottom four. Really of long positions. So the long positions were cut down on the CAD. We look at the shorts. The highest short position, I'm not quite sure if it's got above there, but it's close for the year on the COT data. So it's not painted a pretty picture. Now I'm not saying that the COT data is the only driver. There are other drivers as well. Out there,
and I wonder what's in their minds. I wonder what's got that in their heads.
Well, exactly, and this is where you start. This is where you start to look at the rest of the picture and ask exactly that. What is in the mind of the market participants that suggests that the CAD is so weak. Now, there's probably no great deal with me sort of like putting up another spreadsheet, but reading from this spreadsheet, manufacturing PMIs below 50%. That happened on Monday. Manufacturing PMIs below 50, so 49.8. Retail sales at minus 2.5% from 1.1% in August. So the consumer's showing signs of pressure. PMIs are suggesting that that manufacturing is showing signs of pressure. Building permits at the 1st of September, negative 6.6%. So we've seen the housing market under pressure as well. Now,
I think
is
that's
it that?
global as well. However, I'd
Yes,
hasten to
yes,
add.
you're absolutely
Yeah.
right, mate. It is global. But now, am I correct on this? Now, there's. I'm pretty sure. I'm pretty sure it's the CAD. I'm pretty sure it's the CAD, but because I'm not 100%, maybe I shouldn't state it. I won't state it, mate. But one of the nations, and I can't remember if it's the CAD or the Aussie. In fact, you'll be able to tell us about the Aussie. The mortgage applications only run for 5 years. Is that correct in Australia?
Applications.
No, as in you can only secure your mortgage price for 5 years.
If most of them are now 3 years fixed term.
3 years, but in this country you can do so like 7 to 10, even some places offer 12. Is that possible in
We're in the
Australia?
States. No.
No.
The States is 30 years, or used to be.
Yes, it is. Yeah. So in Australia, maybe it's Australia then. Well, that's a big problem. You know, if you can't secure your mortgage for longer than 5 years, many people will be coming up to mortgage renewal much more often, of course. So that means they're going to get hit by these higher inflation, these higher interest costs. Now, I don't know if it's the same in Canada, but it's something that we need to look into, because there was something else about Canada which was very negative. CPIs are still at 7%, so you know the economy is in trouble. Now, it might also be down to oil as well. You know, that might be what's driving the COT report in the way that it's been going, and particularly because we saw the price of oil come down substantially. This might well turn next week, but if you then look at the charts, you know, the currency market, what we are also seeing is the charts telling us something similar. This obviously is the Aussie CAD that we talked about before. Big bounce in the Aussie CAD from the lows after seeing a dovish pivot from a dovish statement from Australia. Dollar CAD not so negative really. You know, we've seen the dollar come down quite sufficiently against the CAD, but CAD Swiss down last few days. The CAD yen is probably doing everything against the yen because the yen is incredibly weak. This is the CAD Sing, which is also on the week. It's slightly higher, but it is starting to reduce down right now. But it does look like there, and I mean the pound is obviously just a crazy currency right now. But it does look like there is there are problems. This is the Euro CAD. EuroCAD's kind of in balance, but I think that there are a few sort of like issues in Canada, and I think that you know, because Canada is such a one of the stronger economies. I'm not saying it's turning around necessarily, but I wonder whether there's some profit taking going on, and that's what the COT data is telling us. It's definitely telling us to have another look at the Canadian dollar to see if there's any more downside.
You know, it's interesting when I have a look. I'm looking at the Canadian dollar index on my chart, which I can't show you guys because it's on another computer on a different account, which is why I can't put it on here. But if I have a look at the Canadian dollar chart, it's been going down since May 21, the Canadian index, and it does look like a higher low, but it's got another probably 1/3 to go before it reaches the lows in the current cycle. So I can see the point. I really see the point. Now that you point out that commitment trade, I can see why technically they can see more downside.
Yeah.
And you know, when I think of the Canadian dollar and through COVID, it was always going to be, to my mind, one of the three, or probably it and the Aussie and the CAD would be the two strongest I could think of to come out of that because of their resources. Yet, when I look at that chart, I think, well, hang on, I'm completely wrong. The CAD's under pressure.
Yes, it is, and I suppose that in the same way that we see the Canadian dollar and the Aussie dollar do quite well in a growth environment, we are moving away from the growth environment, and China in
Yeah.
particular is in terrible trouble, and you know that won't help the Aussie case
No.
at all. So we are
Although I
kind of
think
like
we are kind of weaning ourselves out of China. It's not as bad as it once was, but it's still bad. I mean, they're still the major trading partner without question.
right.
But the more India comes on board,
Yeah.
and the Pacific nations come on, and Southeast Asia come on board with Australia, then the less reliant they are on China. And I'm not saying that's the case now. They are absolutely tied. There's no question. But it is getting improving. I'll put it that way, from
Yeah.
an Australian reliance on China point of view. And I think the world has the same attitude, frankly, with what they're seeing as bullying coming out of that out of China.
Yeah. Well, do you know, it's an interesting dynamic in China, and you know, I heard something quite interesting the other day about the Chinese strategy back in the 1970s, where they kind of went with these three kind of doctrines, and one of them was to try and build almost like a free market, try and sort of open the doors of China and build like something that was more capitalist, so that the economy could start to grow. The second one was to make sure that culture was very, very firmly based in the growth. And then the third one was to then switch the economy back to a communist supporting nation, you know, without the kind of strong arming that Mao would have done, and effectively bring people back into the communist thing to try and spread all the wealth that was created from the capitalist environment. But what we've seen over the last 10 years, really, from Xi Jinping's premiership, is that the boom has started to choke, and it's choked so drastically that they can't move to phase three. You know, that they're sort of now they're kind of caught in this sort of like very difficult position where they kind of need to keep the growth going if they are going to be able to kind of like get to the stage they want to get to, so they can then start to push it out into the kind of back to the kind of communist idea again. But it's fascinating.
Like everything else, the growth that they sustained through, the noughties.
Yeah,
it's just 11%. It's unsustainable. You can't keep going at that level.
Yeah,
and obviously we're seeing that come off now.
Yeah, and inevitably, you get sort of like a nation that is able to kind of grow at those particular rates because everything's so cheap. Labor costs are very cheap, so nations across the globe will use that country like a factory.
Absolutely, and have done, and have done.
But as soon as they sort of like step into the next kind of tier, then they don't become quite as competitive. So then you do start to move to places like India or Brazil or other nations that can now provide a more competitive edge than China can. So things have changed. And I wonder whether we see more of a decline in China than people thought was possible 10 years ago.
And we've been talking about this change for a long, long time. What it looked like on a scale in terms of are we still going to be trading euros against, are we still going to be trading Aussie dollars against yen? We don't know the answer to that question still after all of this speculation. And the digital world has been in turmoil for the last 12 months, nearly 2 years. How that sorts itself out, whether the Reserve Bank digital currencies are, there's still too many questions and no answers.
Digital currency thing's really interesting, and it's really interesting sort of how people kind of like push the narrative of a story that suits their argument. I've got a friend telling me that to buy XRP and how it's going to be adopted by banks, and he sent me a report yesterday of how it's been adopted by the Royal Bank of Scotland. This is Ripple. This is the Ripple International Payment System, using that instead of SWIFT. And the Royal Bank of Scotland haven't been a bank for about 8 years. So we're talking about a story that happened 10 years ago that people are peddling today, that isn't, because it kind of like it suits the narrative. And then you've got friends of mine that are sending me these things, going, look at this, and I'm like, that's out of date, and they don't know. They've got no idea that these stories are kind of from 10 years ago. And you've got to be so unbelievably vigilant with scams and false and fake news right now. It's difficult, which is why I really like sort of saying, let's have a look at the fundamentals. Let's have a look at the COT data. Let's have a look at the seasonals, and then look at the charts, and you will probably get all the information you need to make a relatively good decision about which direction you're going to trade in. With triggers and money management and all that sort of stuff comes after. But as long as you look at that stuff in enough detail, it's data. It's not somebody kind of spouting false facts about that's really formed from opinion. This stuff isn't opinion. Sometimes it's late, and sometimes it's people will react to it in a different way, but it's data at least, and it's just kind of forming an idea that you sort of like, or forming a strategy that you see the data eventually play through and provide opportunities over not on a trade by trade basis, but over a long period of time. So that's where we are, mate. Anyway, so I'm down with your CAD pound trade, even though incidentally this morning we learned that the UK is losing its financial position as the kind of financial hub, as Paris starts to overtake it as the place to go, and Brexit really is starting to bite at the worst possible time.
So I guess all of that said, do we have any idea what the market sentiment is today? And seriously, like I said, for the last 2 weeks, I've been struggling to actually read that. And
agreed.
When that's the case, I'll just stay out of the market, which I have done. But suddenly I've got two orders in the market, suggesting that I've got a clear idea of what direction, and that's not the case. I can't read market sentiment still, but I've got like setups that I've traded for 15 years that I just simply have to trade, and if I don't trade them, I'm a goose,
Yeah. Difficult, mate. It is difficult, and I'm waiting for a setup on the FTSE. I'm still looking for FTSE downside. I don't know if it's there yet. And the market sentiment is difficult to read for me too. So I'm the same as you, mate. But I think it'll be next week. But by the same token, because I know things can change very quickly, actually this does start to look a bit more attractive for some downside. I'm not. Yeah, still not sure. I'm still not sure, but yeah, I might be joining you in trading something that I'm only 70% on.
Yeah, well, all I did was just reduce my risk. I mean, that's a pretty simple formula. If you're not sure, reduce your risk. So I'm more than happy to do that. But on these two, but if it's not, clear to me that I have my setup, then I just won't be in the market until I do have a fair idea of what market sentiment is and where it's likely to go. But like you, I'm waiting on the indices for next week. I think they're going to provide opportunities to just trade with the trend at the end of the day. If they break the trend, then okay, we might have to change our mind. But currently, they haven't broken trend.
Yeah, totally agree with that. That's exactly the way I'm treating it. Just waiting for I'm really waiting for these short-term trends to change, and if they do, then I'll be looking for the shorts and probably sticking with it for a little while to the downside.
We haven't spoken about Little Rocket Man. Any thoughts on what that may or may not do?
I think my problem with it is
if it progresses.
Yeah, I mean, if it progresses, of course, but we've had this for 5 years, and with the whole kind of Trump scenario, when it happened, then there was a big reaction. But I think that there's a danger of sort of like knee-jerking stuff. Same with Putin and everything else. There's a danger of sort of trading on a headline without things progressing. However, in saying that, if you don't, you're unlikely to catch anything if things do progress. So I haven't really got an opinion, mate. I mean, I'm trading very short-term charts. I'm putting protection in place, and that's all I can really do. But when it comes down to reading about whether people are launching ballistic missiles or moving nuclear weapons from one country to another, I tend to ignore it on the whole, because it's been going on for time. I can't make a decision off the back of potential tensions.
You wouldn't trade if that was the case, because you'd be too terrified to go into the market.
That's true. Yeah, that's probably the best way to handle it, isn't it? Just leave things alone. But there's always something.
There's always something, absolutely. I think probably my attitude to that is what you just described. Place your trades, don't have a problem with that. You'd be extremely unlucky if they press the go button while you're in a 30-minute trade, really, I believe.
Yes.
So
yes.
I don't have any problem with it at all. What I do have a problem with would be leaving market over the week. I don't think that's a great idea.
Yeah, I agree. I'd want to be protected by the weekend every week, really. But you're absolutely right. I mean, it could happen at any point, but I think you're probably more likely to be a bit safer if you're on short-term time frames in this environment.
Yeah, of course. The only problem with that is in front of the charts, and currently that's not an option for me too often, which is a shame. But one day,
yeah. But then I suppose that's when you say, well, that's when I'm not trading, right? If you're not in front of the charts, there's no trade for you, and if you are, then that's when you do your 30-minute stuff or hourly stuff. But if you can't get in front of the charts, then it's and you've got trades on. That's no different than leaving it over the weekend. It's just too dangerous.
Yeah, 100%.
Yeah.
Whilst I said silver was a good trade early in the week, and I thought it really was. I'm still keen to get short until fine. I'll show you the chart.
Let's have a look, mate. I mean, at current levels, it looks like everything else, doesn't it? A lot of these risk assets are kind of they've pushed to levels which are
very much the same chart.
Yeah.
Same chart, no matter where you look, really. But it is a little bit different to gold, for instance, and there's the difference. Gold is rapidly approaching a resistance. It may even bypass that, which is interesting. But silver, I don't see any confluence at all.
We haven't got your chart yet, mate, and I don't know if it's something to do with my Zoom has just collapsed. There we go.
No,
that's better. Yeah, got it.
Slow connection, I think. Yeah. Hang on, I'll get rid of all these lines, which were target areas, of course. There we go. The only confluence I can see on silver is a long, long way from where we are, which concerns me a little bit because I'm still a bear. But
well, I guess
this confluence I can see is here.
This is the thing about waiting, isn't it, mate? Because, as you quite rightly say, these charts could go a little bit further before they turn around. So until we get confirmation that they're turning around, then we kind of can't do anything about it.
That's exactly right. There is one level that I have spotted, and that's it there, which is interesting because we bounced bang off it. And remember I called, I think, this level on Monday. So the confluence there.
Yeah.
We have bounced off it. So, like there's even a little trade there that I didn't see on the 4-hour chart. Like we said, next week, early next week, I can see it, probably be Tuesday or Wednesday. What I'm seeing here in the 4-hour chart is exactly what I need to see on the daily chart. In other words, I need to sell off, done that tick, then I need to see a lower high. And there's that potential lower high on the 4-hour chart. But I want to see that on the daily chart. So I'd really like to see the daily maybe even close down here tomorrow, today, don't care, then come back and give me the lower high. Because after all, if I use my market structure, then my market structure is telling me that that's what's going on. I'm actually deep in a range.
Yeah.
And we've now come back inside that range. So when that happens, all I need to see, as I said, is a re-entry lower high. So I'm going to be waiting 2 or 3 days for that. Probably happens, may not happen. The other one that looks very similar to that is dollar CAD.
US CPI data not released till next Thursday, which I think is potentially quite telling as well. I wonder whether the market freezes until then.
Okay, interesting. But this is a big picture thing with dollar CAD. You don't need that black one there anymore. The range is super, super big and super, super long in the tooth. Going back to 2015 here. And this big double top still in play, in my humble opinion. All I'm looking for, once again, is the lower high here. This may be it, I don't know. Weekly chart is suggesting break. Daily chart is suggesting that we've come back inside the range, and we may well have produced that low high. I was going to do this in my preview this morning, and I did do this in my preview this morning. I said this may well be tradable as it is. It's also a double cross on the pivot, which I like. And I actually don't know why I haven't placed that order. I don't know why, because it's something that I would normally do. I think it was because, well, I know it was because it's too quick. When I think retracement, we've got the retracement. Is it deep enough? Not sure. I'd like to see it a bit deeper, I must admit, and then get back here a little more slowly than it has done. But that, to me, is absolutely looking for. 4-hour charts already produced this bar here yesterday, late yesterday. Eminently tradable, 100% tradable down to here. But that's as far as it goes because the pivots are in the way. So that's why I want the daily chart to get maybe a little bit deeper. Maybe it has. Maybe that double cross is the play. NFP tomorrow, interesting. I'm still tossing up whether to trade that or not. I guess the reward is there, but where do I put my stop loss? And that's the real issue. Do I put it above the weekly pivot? Do I put it above the highs? So I really can't gauge where my risk belongs. And if I do take that and it goes back to the weekly pivot, then goes, I won't be very happy. So that's the conundrum that I do have here. I'm all convinced that this is going down here at some stage. But like I said, this has been around a long, long time, for 5 years, 6 years now. So I don't need to rush into it, I don't think. And that's why I'm just being that little bit more than that scenario would suggest on dollar CAD. But like I say, it's very, very similar in scenario to silver at the moment.
Yeah, I think some patience is really the answer for us today, mate, and just waiting. I see a very sticky market. I'm just looking across at some indicators, and I'm looking at a market that looks quite difficult. It feels like it wants to go a bit higher, but it's just very tentative, and I don't see a whole bunch of buyers coming in, but I see a lack of commitment from the sellers at this particular stage. And you know what the catalyst is going to be, I don't know. But as I say, CPI next Thursday may well be it. It might be the employment data we see from the States tomorrow. I don't know, but certainly right now, this first session, I mean, we got Chinese bank holiday as well, but this first session is suggesting that it's not the clearest market to get
It's pretty
involved in.
uninspiring, isn't it? I'd
Yeah,
have to say.
yeah,
Completely uninspiring. And the pound just could not get through here, couldn't get through the daily pivot. And that now looks like it will probably be a loser, which means it'll be the second loser for the week. One winner, two losers, one break even, which means it's still a winning week because our 2.5 to 1 keeps us in front, even though we've got
good
two.
job.
Well, we haven't got two losers yet, but it still can be a winner. But even if that does get taken out, the week is still positive. And that's a good thing with two losers.
Yeah, great job, mate. All right, mate. Well, let's wrap it up and leave it there. Unless somebody's got any questions, of course. Anybody in the room wants to kind of add anything to the discussion, or you got any questions? And it doesn't matter how simple it is. It really doesn't. If I don't seem to be getting any chat at all in my feed, and I don't know why. Because I sometimes
I've lost it as well.
You have as well. Okay. But I sometimes hear you answering questions, and I can't see them. So
I think it's because whoever's asking the questions is asking.
They're asking
as a direct message. Yeah,
that's okay.
Because
all
this Zoom does what it wants to do, as you know.
Yeah, yeah. But yeah, I mean, people can come on camera as well. But if nobody's got anything that they want to add to the discussion or change the discussion in a direction, no big deal. We will be back on Monday and see if we can do it.
No holiday, is there? I don't think.
No holiday. No, not for.
Okay.
I don't think for the rest of the year now.
Oh my goodness.
Yeah,
Really?
I think that the next thing we will have is we must sort of like understand the British clock change. The trade
Oh yeah, when's that?
That is the 3rd, I think, of November or the 5th of November. It's somewhere around that first week of November. So that then the show will be an hour earlier.
Yes, it'll still be London open. It will change.
Yeah, might be the.
For everyone else.
Might be the 7th. The first time it'll affect the guys in the room will be the 7th of November.
Okay, we will take note of that. I'm already affected, of course, because Australia went on to daylight saving last week, and now I get a couple of weeks grace, and you'll do it again to me.
Yes, we will, mate. Yeah. I'm just double checking the. October. Is that right?
Yeah, it's October.
It might be the week before, actually. October the 30th. So that means that on November the 3rd. No, I'm in the wrong month. That's why. So then October the 31st. October the 31st will be the change.
Okay, note that well. In the meantime, let's get out of here.
Paul P, just because of British clocks changing, it's not a new time slot. It's the same time slot effectively, but because the British clocks change because of winter, that means the FTSE will open within it will still be 8 a.m. our time, but we are going forward an hour or back an hour. I can never remember what it is.
You'll be going back.
We go back, yeah. So look into it. It's to do with the clocks changing, the winter hours coming in. We go back is that all right? We go back an hour.
You go back an hour, yeah.
Yeah, so we'll be back an hour for you as well, Paul, just by now. Okay, no problem, mate. Okay, yes, let's do it again on Monday, mate, and push off. Thanks, as always, for being our trading buddies. Thank you to you, Jeff, and to Marlon. I will see you Monday.
Have a great weekend, everyone. I nearly got that out without stumbling, which would have been good. Have a good weekend. Bye-bye for now. See you.